Welcome back to the Watchlist. Our panel's ready to talk all about consumer sentiment and all these economic prints that we've been getting in. Next week, we have a lot on jobs. Brian Szytel, Managing Director, Partner at the Bahnsen Group. Thank you for being here. Brian, I'll start with you. Some of your thoughts. I mean, obviously, we've gotten in PCE and sentiment today, but a lot on our plate, isn't there?
A lot on the plate, and to both of those, PCE was a little bit hotter than expected just on core. Headline was basically in line, and so it's continued story there on inflation. Sentiment has obviously pulled back sharply, largely around tariffs, but I would look at that more of as a lagging indicator, and going forward, we still see positive things.
And let me just follow up with one question. I mean, when you're seeing sentiment, do you sort of discount it because it's more soft data versus hard data?
I do discount it. I think it's basically a survey of what people have just gone through, what they feel currently, and I think it's flawed for that reason. I think if you look at the survey data and just break it down by political bias, you get vastly different results to the same questions. And so, that soft data isn't something that we pay a lot of attention to. It's certainly around portfolio management. It definitely gives you some sort of a vibe or a mood on, sentiment and market, but it's also very fickle and it can be volatile, month to month. And so it's not something that should drive a long-term decision or anything like that.
A lot of people think that maybe, we're overreacting. It won't be as bad as it seems, et cetera, et cetera. Many of the prints are strong enough or whatever. We're not going into a recession or depression or anything like that. Here at Brian, as we take a look, next week we're going to have a lot of jobs data, as well as the April 2nd tariffs. What are you bracing for?
Well, I wish I could tell you what you should brace for as far as April 2nd. I think there's a lot of volatility on what may happen then and what's being negotiated from now until then. But, to your point on employment, that's what drives sentiment largely. People have jobs, people have real wages. I have no worry or concern about the consumer not putting money to use and spending it. The U.S. consumer is something you can almost always count on, so long as they do have jobs and they do have money to spend. I would note the strength of the consumer balance sheet too. Jobs, obviously, unemployment has come up here. We were at 3.6% unemployment. We're at 4.1% now. So the delta between those two things is meaningful. It matters. That said, we're still considered full employment, and wages still have been keeping up with inflation, at least as of 2025. And so there's a willingness to spend, and I think there's an ability to spend, specifically with credit expansion, and we're seeing that as well.
Brian, I'm out of time, but just quickly, you think the animal spirits are maybe just sort of hibernating a little bit?
I think the animal spirits are on pause until they get clarity around what's going to happen with trade, essentially.
Brian Szytel, thank you.